we have clearly been able to show that productivity is a much more stable lens because it measures how efficiently company turns resources they have into cash flow or into future cash flow. Therefore, we are not really focusing on short-term market sentiments.
Welcome to today's Solactive Product Talk. My name is 𝗪𝗿𝗄𝗏. I'm heading Equity Index Structuring at Solactive. And today our guest is Dr. Leo Brecht from Averdas & Company. And we talk about productivity today. Leo, welcome to Frankfurt. I hope you had a good journey here.
Yes, of course. I'm really happy to be here and to make this conversation. Hopefully I can answer all of your questions.
The classic joke. I hope Deutsche Bahn did not disappoint you coming here from Zurich today in the morning.
Very good point. It was a bit cold, but I arrived on time, so it was fine for me. Okay. But I have quite a long trip.
That's good. That's quite a lucky start for us already. So that's good news. Tell us a bit about yourself and Averdas as a company and why you're here today with us.
Yeah, sure. Let's start with me as a person and what I've done over the last couple of years. You know, I have several jobs. First of all, I'm professor at university, in a small university in Liechtenstein. Maybe not all of you know Liechtenstein, but it has a university. That's nice. And I'm a serial entrepreneur. So we founded Averdas a couple of years ago based on a company we have already founded more than 10 years ago. And that's a little bit my profession. And from my studies, I study mathematics, so we are very much quant-oriented. And so this fits perfectly to what an index provider is doing. Now let's quickly go to Averdas, what we do or what we stand for. Averdas is an investment house and investment advisory, mainly focusing on factor indices, on funds, and on ventures. And we follow the principle productivity we have to invest in. And we recognize productivity as a scientifically proven, largely uncorrelated driver of returns. And that remains, from my point of view, still underrepresented in the finance community. We use a lot of mathematical models for stock selection. We have a close collaboration with the research organization like my university, of course. And we have over a decade of experience in developing really innovative solutions for the investment community.
Mm-hmm. Thanks a lot. Thanks for the introduction. And maybe looking back at why you founded the company, looking at the current investment landscape, do you think there is anything fundamentally overlooked or misunderstood that also triggered you founding Averdas and looking into that specific methodology space?
Definitely. You know, our former company had the slogan, invest in innovation. But this company was sold a couple of years ago. And then we looked a bit back and decided to develop something new. And I would like to summarize it in one sentence. And the sentence is, Wall Street underestimates productivity. So Averdas, within Averdas, we address one of today's most pressing challenges, we believe, and that's unlocking economic growth through productivity gains. And this creates, from our point of view, really a double win. And the double win is, the higher the productivity is, the higher is the GDP, or the GDP growth, and it moderates also inflation, while also strengthening corporate performance and also, which is a consequence, long-term share price development. That's what we do fundamentally different.
And why do you think is exactly this topic, productivity, so critical right now, looking at 2026 with all its challenges in the investment landscape? Of course, we're all aware of that.
Yeah. Yeah, that's a very good question, and I really like to highlight that a bit. Productivity has become really critical because growth is harder to generate for each and every company all over the globe. We have aging populations which limit labor expansion. We have capital which is more expensive, and of course inflation pressures the margins. So in this environment, companies can no longer rely merely on scale alone. They must use assets, processes, innovation and talent, which are exploited much more efficiently. And that is exactly where we jump in. So for an investor, that means returns increasingly come from these productivity leaders, as we believe. So it perfectly fits to what's going on in the economy right now. In a nutshell, I would say growth is scarce and capital is costly, and productivity therefore becomes the key driver of performance. in these days.
That's interesting. And actually not only looking at the performance part we just discussed, but do you think that also looking at volatility spikes, for example, do you expect or do you see productivity to be a more stable, maybe less cyclical lens for investors than current fundamental factors?
We have done a lot of research before we started a collaboration with you with the index, these productivity US indices. And we have clearly been able to show, which is also published in some of our papers, that productivity is a much more stable lens because it measures how efficiently company turns resources they have into cash flow or into future cash flow. And therefore, we are not really focusing on short-term market sentiments, so to speak. And in our framework, we focus on the asset productivity, which reflects how efficiently a company uses investments in capital, in technology, in human resources. We focus on process productivity, which captures, so to speak, operational excellence, which is also not yet covered in normal models, we know. And we also focus on the resources, measuring how a company creates more value by a unit of resources invested. So I believe, or we believe in our company, that these drivers are more structural and persistent. And if you look at the figures, it also reduces, as you asked at the beginning, the volatility on the longer run.
That's very interesting. And especially, I mean, we all come from the rule-based space, right? We develop rule-based products for investors, so they don't have to worry about that. Yeah. But I think in general, and there might be some retail investors listening or viewing this as well, it might also be interesting for stock pickers, the whole productivity lens. Yep. Do you think, or how do you think productivity can lead to smarter portfolio decisions, even for retail investors that maybe do not track a big passive product on this?
Yeah. You know, we already have built up a community of retail investors or possible investors, which are more the younger generation. And they are really looking on innovation and productivity. And I also think that a company achieves productivity gains by innovation, and this attracts really the retail investors as well as not only the institutionals. So we believe that productivity is therefore a foundation of sustainable return because it really determines how efficiently capital converts into future cash flow. And I think this is what these retailers are looking for. So it's not only focusing on the current market development, but also on the expectations from the retail investors.
And what does the actual data show when looking at those companies that excel in productivity? How does it compare to other, let's say, fundamental metrics or traditional style factor metrics?
Yes, the data clearly shows, I would say, four things. First, companies that excel in productivity generate stronger long-term risk-adjusted return. We have tested that. This is, so to speak, proven. Second, productivity factors are largely, and that's very important, are largely uncorrelated with classical factors like value, momentum, and you all know that. Third, high productivity firms demonstrate greater operational resilience, therefore reducing the volatility. And fourth, I believe because productivity is a core driver of economic growth, these companies could also benefit from any structural tailwinds.
Thanks a lot for joining us today. Thanks for coming to Frankfurt. To our listeners and viewers, thanks a lot for watching today, for listening today. I think we all have some interesting takeaways also for our own personal investment when looking at productivity. Looking forward to see you soon in our next video.